Well, the list of big resources projects in doubt because of the 40% resources rent tax lengthened this week, with Santos warning its $8 billion coal seam gas plant in Queensland is now no certainty. And on the other side of the country, Fortescue Metals Group put on hold two big expansion projects in the Pilbara, valued at around $17 billion. So while all the miners suffered again this week, Fortescue had a really bad time, as analyst after analyst issued research saying that it'll be the hardest hit by the tax because of its capital structure and the fact it's a relatively low-cost producer. On JP Morgan's figures, for example, the new tax would slash Fortescue's net present value by more than 20%, compared to the less than 10% cut it modelled for the other big Pilbara tenants, BHP Billiton and Rio Tinto. I spoke to Fortescue Chief Andrew Forrest in Perth. Well, Andrew Forrest, Fortescue's share price has been hit much harder than everyone else's. Why is that?
I think that just the straight net present value fall, which comes from this so-called super profits tax. Today Macquarie came out saying that they're downgrading our value in the Chichester project by 20% and in the Solomon project by nearly double that to 35%. So those severe downgrades of our value is the very reason why we knew that we couldn't continue our financing strategy with the Solomon project. It's just the fact that we can't finance these projects now.
So what effect will the tax have on your earnings from existing projects?
Look, it's severe, and I suppose for me, whether or not I, as a philanthropist, give the shares away or pay it in tax, to my family it doesn't make a lot of difference. But what really upsets me is that we are now unable to finance our future projects, which those revenues were used for.
Well, tell us about how the financiers, the global financiers, are now regarding your proposals and Australia in general as a result of the tax.
Look, they're fleeing Australia, unfortunately. You can see that in the share prices of all Australian asset resource companies. You can see in the share price of those companies with offshore assets, they're staying very stable. If you look at those companies with Australian assets like ours, generating Australian jobs, generating Australian tax, generating Australian royalties for Australia, we are the ones who are absolutely getting hammered.
What's your view about the timing of it? I mean, do you think that the response from the mining industry and the market would have been as severe had there not been this panic going on in the markets?
I think actually you've seen other corrections in international markets where Australia's done very well. The resources sector saved us from a situation like Greece. It was the powerhouse which drove us through the global financial crisis. It was that resources powerhouse which continued our ability to invest right throughout those down cycles. Now, we don't have that ability to invest now. Quite simply, those revenues needed to support future projects are gone.
Well, that's pretty extreme. Are you saying that that there will now be no growth in Australia's resource industries?
I think it isn't me saying it. You can read it in the Wall Street Journal, you can read it in the Financial Times, you can read it in Responsible Economists. The very keystone which underpins this tax and justifies the word super profit above the risk-free government bond rate is, of course, this so-called 40% tax guarantee, where if a project fails, and there's been billions of dollars of failure, then the Australian mums and dads are going to write out the text to that, write out the cheque to that international company or that local company. Now, the problem is that while the mums and dads of Australia will write out cheques to potentially now foreign owners, they won't see that benefit because Australian owners like me can't derive any value in that whole underpinning keystone to this tax.
Well, the government's actually said it's going to enter a consultation period now, which could take as much as 18 months. What do you think of that?
Alan, I need to ask you, has the government said that the 40% cannot be discussed and that anything above 6% is a super profit and that can't be discussed either?
Well, I've said the 40% rate is non-negotiable, I think.
And they've also said to us the 6% threshold is non-negotiable as well. So the two underpinning factors to this tax. The 40% cutting in before you pay interest, before you pay all your other taxes, before you pay off your capital to your bankers. That cuts in straight after 6%, which of course means you now can't project finance because the money you needed for your bankers, the money you needed to pay interest, that's gone to the tune of 40%, which means if you were someone borrowing money to buy a house, apply this same scale, your bank is going to say, sorry, you're going to keep renting.
Is that what the banks are saying to you, that are they just shutting the door on you now?
Yes, we've had a large number of banks in the Solomon project very interested. They've all pulled out. We've had a number of banks in the Chichester expansion. All but one's pulled out. The Macquarie analysis marking us down by 18% and 35% in the Solomon project, which was previously the world's most valuable undeveloped iron ore project. Now that we can't finance that, we can no longer guarantee those jobs. There's some 20,000 jobs which are now placed in question, all because we're relying on a piece of logic in a theoretical tax which simply does not work.
Yes, well, a lot of economists, including Ross Garnaut, the chairman of Lihir Gold, say that the resource rent tax is the right way to tax because these are non-renewable resources that the community owns. And what's your response to that?
You know, I have a great affection for Ross. He's a terrific guy, but he knows himself. And I'm sure the Treasury Secretary knows himself. And it's not a question which I should ask or Ross should ask. This is a question the Prime Minister, Kevin Rudd, must ask. If there is no value in the underpinning reason to why you came out with this tax, which is that 40% tax credit, if there's no value in that, doesn't the whole theory behind this tax collapse? He's going to be told, yes, it does. Now, Prime Minister, once you have that question answered, take this tax off the table.
So what happens if they don't?
Well, you can see it in share prices now. You brought up Professor Garnaut. He's chairman of Lihir. Lihir's share price has done very well through this period. Those companies who don't have assets offshore, like Professor Garnaut's, like my shareholders, my 55, 60,000 Australian shareholders, their assets are here. They're caught and their assets are being hammered in value. We got a note from the Chinese consulate only half an hour ago, and it said Australia's competitive advantage to China over Brazil, over India, over all these massive competitors Australia competes against, that competitive advantage we did have is now gone. So what happens now to our children? Our children, when they grow up, they must chase those careers in better industries than our resource sector overseas. Our kids can no longer chase the best jobs in the best industries here because someone introduced a tax on a totally false premise.
One thing you do agree with the government about is the need to employ Indigenous Australians, and through your Generation 1 project, you've set a target of employing or giving jobs to 50,000 Indigenous people. Is that going to be tougher now with this tax?
Alan, you will forgive me, I hope. Every question I've answered here, I've been very open and honest about. Whichever way I answer that question could hurt our Indigenous brothers and sisters. I don't want to answer that, but I can say, Alan, we are holding in our hands right now, as the Australian people, the end to the disparity. It's the ability to wipe out this hideous imbalance which exists within the Australian people. We hold that now. It's called guaranteed employment. Now, yes, there's a high-class challenge to the government. With guaranteed employment for the first time, you need specific and proper training. You've got a reason to train to those guaranteed jobs. That highlights another challenge. We've got to get our education right now to match that training. And, of course, it eventually goes to where it must. And that's the mums and dads of the Indigenous boys and girls to say, get out of bed, go to school. We mightn't have had a choice. Maybe welfare was our only choice. But you kids, you have a choice. You've got guaranteed jobs waiting for you. You've got education waiting for you. You've got training waiting for you. Get out of bed, take those jobs.
Thanks for joining us, Andrew Forrest.
Thank you very much, Alan.